First question.
Fred, this is to you. You posted on LinkedIn today about ERC20 being the tulips. What did you mean by that? And could you elaborate?
Yeah, so I guess my realization was I think everyone talks about cryptocurrencies, the tulip crisis, there's a bubble, blah blah blah, and my contention is not that I think actually that the ERC20 token and the whole flourishing of it, that was a tulip. That was the whole bubble thing which went on, right? Because I can right now write a security token. I'm sorry, write an ERC20 token and pump out you a Fred token, and everyone can buy it, and it can be worth nothing. I think that's what everyone got onto, and then it just went to an insane level. And I think we're unwinding that right now, and Ethereum is just taking an absolute carding right now from it.
Okay, what do you think replaces it?
So I think if you look at the ERC 1400 standard, which is the security token standard, I suggest everyone have a look at that. It's actually very, very, very well written. It's got a lot of comments in it. The GitHub's very active in it. There was other ones before that, precursors like the 728. But I'd go the 1400 if I was building a token today.
Awesome. We've got some questions from the crowd. For that, I might ask Cameron a quick question. Current bear market, how's it affecting the token economy?
Well, from what I see, I think it's affecting it massively, actually. I think if you're out there with an idea and a white paper, then you're probably in a bit of trouble. You probably have to put it on ice for a while and wait for things to change. I think I've noticed a few things. I've noticed some fake news coming out, on especially out of the US on certain things, which I think, this is just my theory, that I think that there's certain organisations in the US that are about to make some announcements, and I think they're trying to push the market down so that because they'll need to buy quite a lot, especially Bitcoin. So watch this space. I think something's going to happen. So I think that once that happens, obviously it'll improve the market, and people will probably realise the value of tokens. Not all tokens. A lot of token projects are fantastic, but there's obviously a lot that are a bit dubious.
Jacob, you got anything to add on that one, mate? You want the question again?
Sure, yeah. Question again, sure.
Question again was my question. Yeah, how's it affecting the token market?
Look, of course, it is affecting certain ICOs, especially the newer ones. I do agree with your point there. For us, not so much. We're a long-term project. We've identified a flaw in the marketplace. We've got the innovative technology and the know-how of how to fix this issue. So it's not really affecting us so much. As we said, we're about to close a sale anyway. So we're just trying to spread the word, really. We've got a great product, and we've got an opportunity that we'd like you to get involved in. Everyone. So for us, not so much.
Beautiful. Fred, you got something to add on that?
Yeah, I guess I have a very strong view on this, in that I'm not sure why we have all these tokens and all these new tokens. And I think instead what projects should do is build on the protocol layer or the protocol that they're building on. So if you're building on Ethereum, use Ethereum as your local coin. If you're building on EOS, use EOS. And I'm just putting it out there. No, maybe I've got it wrong, because I can be wrong, and I tend to be wrong quite a lot. But my contention for that is that you've got thousands of developers in Ethereum building all of these protocols, and that's why we built the ERC20. And so that's what, there's DEXs, there's all these things. And I think if you look at a protocol, they need to construct all of these infrastructure. If you think of it like, when a company starts, they've got an HR department, they've got an IT department and a finance department. And it's the same way, I think, with a protocol. They need a DEX, they need a wallet, they need a standard for this, they need these kind of things. And in the same way, what I think will happen is the protocol should get together and go, okay, we need our DEX. All right, let's raise some money, we'll find some sick developers to go and do that, and we'll put it in with the local token, right? So say EOS needs a really cool DEX, let's go and put it together, and we'll fund it from EOS. And what that does is it drives the local protocol layer, right? It gives it more value, and the other people who are going to put money into it because they want to see EOS grow as well. So there's a fueling of that economy, because I think most of the projects, like the reason why consensus exists and Joe Rogan fuels it is because he holds bags and bags of Ethereum, and he's just driving Ethereum's adoption by building all of this excellent technology on it. And I think that's the way we need to move forward. So that doesn't obviously, I don't know how that fits with some of these projects, and I feel bad for saying that, but that's just my straight chat.
Jack,
Can I just
Jacob.
Yeah, I'd just like
Jack,
to touch on something that
coming
Fred
back.
was talking about when he referred to the ERC20 being the tulips. I'm assuming you're referring to the tulip craze of the 1600s, correct? So on that basis, you assume that Ethereum is going to go to zero? Sure. Now, firstly, disclaimer: I'm not a computer scientist. I'm a trader. So a lot of the stuff you're talking about really is beyond my depth. However, it seems that statement is reliant on the fact that Ethereum won't make it mandatory to charge gas in, let's say, Ethereum. Is that correct?
Mate, you need to, we're live here. We're recording. You've got to be on. If you're going to butt, you got to go. But hang on, was Fred responding then, or was Sam?
No, that was the question was for Fred.
So just say it again. So you're saying, should Ethereum do what?
So, the current moment with Ethereum, like the gas, the payment sort of cycle of it, that is you can receive gas in a plethora of different cryptos, correct?
No, you spend gas to fund a smart contract so it runs.
Yeah, sure, but it's not mandatory to do that with Ethereum at the moment, is that right?
No, you have to.
Someone's got to mine the blocks, it's just the transactions.
Oh, okay, it is. All right, so yeah, my statement's flawed. Forget that one. Thank you. As I said, like I said, refer to the disclaimer when I said I'm not a computer scientist.
And now, just on a little cut for that, I just want to do a little promo. I forgot to do this on the opening. Forgot to do it at the break. So just on that note, I just want to say a big thanks to our sponsors here tonight that are bringing the founder, the CEO, Mark Randolph of Netflix to Australia next Thursday night, and in Melbourne 4 days later. It's most exclusive. It's the first time he's ever spoken. So yes, thanks to StartCon, and you can buy your. Well, mate, what was it? First time he's ever spoken live? Publicly.
With a microphone.
Thanks to Matt Barry and the guys at StartCon. So big round of applause for those guys, and thank you very much. Okay, let's get back to that hard-hitting Q&A. Who's on? One's over here. Thank you very much.
Can I add something on the last one?
Oh, mate, I forgot about that. Sorry, Jack. All the way from Shanghai, and you don't even get
I
this.
know, right?
Sorry,
I
mate,
came
sorry.
here just to answer this one.
Come on, mate.
So if you think about raising money as ICO projects, right? This Ethereum, Bitcoin, whatever you raise in is really volatile. It's like traditional startups raising money in Facebook stock, right? What would you do with that stock? You raise 100 million in Facebook stock, would you just put it in your wallet and hold it there? You wouldn't, right? You would look for asset managers. You would convert some to USD. You would, try to plan it out. But why do projects raise Ether and they just hold it in their wallet? So I have a lot of friends in the ICO space. They raised 40,000, 80,000 Ether, and now it's worth half. So that's just unbelievable. So we're trying to do a lot of education, right?
It's true, and I feel bad for him. But the fact is that Ethereum should be building projects that fuel Ethereum, and grow its ecosystem. EOS needs to build projects and grow EOS. I think what I'm trying to submit is just because they raise money, what I'm worried about is I don't want people investing, this is not financial advice, in projects which have coins which are stuck onto them, which aren't actually relevant and don't need to be stuck on there, is what I'm trying to submit. And that's why I was calling it a tulip bubble, because a lot of people got into that, right? And my submission is actually, I think it needs to be clumped together more in a protocol way, that the protocol itself is funding. Because the reason why Amazon you can't raise money in Amazon shares, and Amazon do that, right? They go and buy assets and they give people their script, right? And in the same way, what Ethereum needs to do and what Consensus is doing, that's what Joe Lubin is doing, it's super smart, is he's fueling the investment of this ecosystem. And that's why, even though Ethereum's taking a big hit right now, there are so many developers working so hard to make that really, really amazing. And that's what's going to drive that forward, if that makes sense.
Yeah, the other thing which you probably aren't aware of, that 76% of all transactions or blocks that are mined on out of proof of work consensus protocol, which Ethereum uses, is done on 5 rigs in the world, right? I don't know if you know that, but there's 5 organisations that mine the majority of all the ERC20 or all of the transactions that happen on Ethereum, and I think that's shocking. If you think about that. Yeah, exactly.
Right, and Oscar, thanks for that question, mate. That just went. That was, I think, in 12 months, that was the longest running roll of a question. That's great. So we're going to move on from that. And next question.
This question for Jack from KRONOS. Sounds like you're running a crypto hedge fund. Incentive model is it like a 2 and 20? I'm pretty sure it's in the white paper. And how do you handle liquidity and redemptions?
So it's not in the white paper, and we are not running one hedge fund. We're trying to build an ecosystem of hedge funds, and we are one of the hedge funds on that ecosystem. So the 2 and 20 model is really inflexible, and the way we've structured our fees is that the more active our strategies are, the higher sharp the strategies are, the higher the management fees and the higher the profit split. If we're just doing a simple index, we're going to charge almost no fees. Redemptions would work like any other hedge fund on one side, but on the other side, we're issuing security tokens, right? So when you're investing in a hedge fund, imagine you're getting shares in that hedge fund, and then you can sell those shares on the market. So it becomes much more liquid for the investors.
Awesome. Okay, questions? Questions? One over here for Gary. Good. I'll be back in a minute. Great. Kev.
It's a question for ThinkCoin. So, look, we had a presentation this morning, and you guys have built your tech, right? So, coming out of the Think Markets group, as I understand it, you've got 50,000 traders trading already on Think Markets. So, the money that you've raised is going into customer acquisition. How many of those 50,000 traders that you've already got trading FX and currencies and other things do you think will come across to Trade Connect?
That's probably a question more suitable for the CEO, but I do know we are trying to keep the two companies completely separate. So that's why we're allocating such a large portion of the raise to new user acquisition. Any of the consumers of our current clients who would like to merge across, they're more than welcome to. We will incentivize them in some way. However, it's not the main. I know that the founders want to keep the two companies completely separate. They just want to use the infrastructure that they've developed in Think Markets to then migrate over to Trade Connect.
Okay, awesome. Next question. Sorry, Gary. I just got stuck trying to get a beer, but nobody's helping me. Over to you.
This is a question for Cameron on RainCheck. I get the idea of the virtualized loyalty scheme, where you've got a petitioned loyalty scheme for provided almost like a service. I think it's a really good idea. What I'm a little bit puzzled by is why is it appropriate to use blockchain for this problem? I presume you're running a private permissioned network. So I'd just like to understand exactly why it's a useful thing to introduce the complexity of blockchain into what looks like a pretty simple problem.
Basically, most brands, or a lot of brands, as I said, a lot of the smaller retailers don't have a loyalty program. They might give you something on your birthday. They don't have any point system. We want to introduce a point system. Obviously, the value of a good or service from a retailer will be different value than someone else's. Like their product value may be a lot higher. So therefore, the loyalty points, if there's a universal loyalty point that runs across all brands, then they're going to require smart contracts or a form to determine the value of each point. Because if we're going to transfer the points across, they need to be, 1 point at one particular retail brand will be worth a different value at another one. So that's how the blockchain will actually work in aggregating that across multiple brands. It's like a universal currency that's aggregated and transferable across different brands.
A couple of questions up the back here. Mate, that's the microphone or not? Nah, come on, mate. You're up.
Question for the panel. 2018, we've seen DEXs and their tokens attract a lot of value. There's also things like tokenized debt or taking out debt against tokens is a big theme. Keen to get the panel's thoughts on the next 12 months. What's the big themes for 2019?
Great question. Let's roll. Who's first up? Let's start with Jack and work our way across.
Okay, I guess cross-chain solutions like OneChain 3.0 mainnet just launched, so you can do like Bitcoin, Ethereum transactions. I think security tokens are going to be pretty big, as you can see that I think Binance made an announcement today that they're launching a security token in Malta. So I think, the utility token model has, some issues currently, and I think if you can give real value to people, to investors with a security token, people might be, more people might be interested in the space.
There's a decentralized exchange about to launch. I mentioned it before, called StellarX, probably the next 2 or 3 weeks. It's based on the Stellar protocol. It's basically a way of tokenizing or digitizing any asset, anything. Could be avocados, could be bananas, could be bonds, could be stocks, it doesn't matter. I think that's going to be fantastic. Plus, it'll be free to transact on the network, because the Stellar Foundation will actually cover any costs that occur. I think things like that are going to come out in the next year. I think you'll see a lot of decentralized. I mean, there's exchanges out there, but they're not decentralized. They can be hacked. They've been hacked. So, if we're really going to get serious about decentralization, then we should be using decentralized exchanges. So I think that as people learn and be able to back digital stores of value onto other assets, I think that'll be quite good. And I think you'll see a lot of that in the next 12 months.
Yeah, how you going? I think some of the major things that you're going to see is a really solid stable coin. I think that's going to eventually get solved, and whether it's a basket of goods or if I'm not sure if it's Tether, but there's some real smart people working on that. I think that will really speed everything up, because everyone's trying to find a universal currency. I think that's definitely got to get solved. Security tokens, like we talked about, I think with the Binance coin is going to be really key. I have another big bet on NFTs, so non-fungible tokens. And I think collectibles are going to explode. I know for a fact that the guys, I was talking to one of the designers of CryptoKitties the other day, and they have like all sorts of cool stuff, with like big brands that already do this stuff, like car collectors, but for tokens and things like that. And this whole idea of, stacking your digital identity with these cool stuff. I've got a token of the Mona Lisa, or I've got a token of this Six Sword, or I've got the token of, this Star Wars lightsaber, or I got whatever it may be. I think that is genuinely going to be, these brands are signing on to that, and they're going, hey, cool, I'm going to go and launch that stuff. And I do think the trading of it is going to be another thing. So I do think there'll be a DEX around that. That'd be very, very solid. It's not quite clear where that marketplace is right now. There's rare bits and things like that, but there should be bit more. And then I think, I know this is very controversial, but both gaming and I think the adult industry, they tend to already use tokens to some extent. And I think they're going to further their way into the actual real world applications more and more. So, as I said, the adult industry already does this online, and I think that's just going to keep going, but it'll get more and more standardized. And then I think the gambling and things like that, where it's a bit tougher to gamble on certain things by using cryptocurrency, it opens up another channel. And I think they're going to be, unfortunately, with every industry, they tend to lead the way.
Okay, my next 12 months outlook, I suppose, I do agree with you. I think we are going to see more stable coins. I also think we're going to continue to see a bit more panic selling, also bad and fake news, bad news coming out, and then I think we'll enter into a bit of a repeated cycle, I suppose. I also think that you're going to start seeing projects similar to ThinkCoin and Trade Connect, that people will sort of get onto this idea of connecting various marketplaces once they realise, once they can see the idea of the disconnectedness. So I think that's my 12 months.
Awesome. Yeah, I agree. I think you will see a few more projects like that, and I've heard a few happening. I think there's a question up the back here from Tim Lee.
I guess just extending to the question, to the point you guys were making just a moment ago. If you think back to, because I'm old enough and ugly enough to have been through the whole .com era, and the first killer app for the internet was email, because it meant there was no postage, there was no letters, that type of thing. I mean, CryptoKitties had the potential to be there in terms of collectibles. I mean, where do you see the first killer app that will take the blockchain and cryptocurrencies mainstream? In other words, away from the 0.5% that own it right now into the mainstream.
So, what's the strict question of the panel, or?
Yeah, panel.
Let's go for it. Let's roll through. Who's up?
I've seen some really cool stuff happening in festivals right now with really, really high frequency trades that are required in using cards and little payments of things where it's really annoying, and actually turning that into real money and then translating back. I think that's a great sign of that becoming more real world. I think it's potentially going to be somewhere in there where you used to go into Time Zone and you buy the tokens. You go to the casino and you buy the tokens, where there's already low barriers to creating change or what are habits for humans. So I think it's somewhere around there. It's very hard to see. And what we're talking about as well is not the first application. We're talking about the second, because Bitcoin was the first, right? And that's pretty understood how that works, and that application works. I think what you're talking about is, that was almost like the BBC boards and, those kind of things. I think what you're talking about is like ICQ, if everyone remembers that. Like messenger apps and yeah, email. Yeah, I guess we're going from bulletin boards to email and messaging apps. And I think it's somewhere in small payments where you're kind of used to it and you go, yeah, okay, it's easier to buy the token than it is to actually use real world money. And normally that's when you're, if you're giving a certain amount of money to kids or something like that, or if you have to, go to a certain confined environment, there tends to be situations like that. I don't know what that's going to be, but I have seen some really cool real world applications at festivals happening right now. And that's, I guess, the young people going, yeah, I don't really care about the cash. I'm just going to use this card, which is preloaded. I'm going to buy those tokens, and then they go, sweet, I'm going to go and use that. And they're all that's recorded on the blockchain and processing really, really quick.
I think the big opportunity is probably cross-border payments, like a remittance service. I think it's a massive market. There's a lot of people work overseas, pay their family back home. The financial systems that we've been operating off for the past 50, 60 years, the back end hasn't really changed a lot. I know there's a lot of nice shiny things at the front, but the back is still the same. If I'm going to transfer a couple of $1,000 to you and you're in the other side of the world, the financial institutions are not only going to take that money for a few days and muck around with it on the short-term money market, they're also going to charge me for it and probably charge you as well. And that's ridiculous. It should only take a few seconds to transfer money. It can happen, and it shouldn't really cost anything. And I think that's where it's going to really take off. There's a lot of, unfortunately, in the crypto world and in tech world, there's too many acronyms and jargon going around, and people just, I was just talking to someone earlier on. I said, if I go to a barbecue, someone said, what do? I sometimes lie and tell them something that they can understand, because it's just ridiculous. The average market, where the big hump is, where all the money's being spent, they don't understand a lot of this, but it won't take long. Someone mentioned, you mentioned the .com boom. I was there too. Fantastic ideas. Really great projects. The unfortunate thing about that, there's no one on the internet then. There's no market there. They're all on the internet now, and the internet is the backbone of how we all trade these cryptos. So I think there's a massive opportunity, and there's a lot of things going to happen.
Cameron, you've got to check out the Revolut app. Do you know it? Yeah. Have you heard about it? Yeah. So you just instantaneously transfer money. Doesn't matter where it is. I can do it with my brother in Spain. He just sent me some money today for certain reasons. But yeah, Revolut. Get on it. No, it's funeral payments, mate. Funeral payments. Okay, so we got another couple of comments there. Anyone want to add to that, or are we just going to roll straight to? Yep. Jack.
I think my guess is as good as anybody else's here. I think a lot of what you guys said makes sense. But I think probably a large player would come in with probably 100, 200 million users already, and then they'll find a way to seamlessly integrate some sort of token blockchain into their service, whether it's Kakao Talk or Facebook, who knows? Or Telegram, yeah, exactly. So that's probably what's going to happen. And I think it has to be some amazing use case, like communication, dating, or money, right? So we're trying to attack that from making money side.
Dating or money, yes. Mate, you're right? Yeah, good.
Yes.
Okay, let's roll for the next question. There was one up the back there, but we got one up here. Good to get these guys talking because they're normally talking to themselves. Here we go.
I'm just going to bring it back a bit where Fred was talking about using the native protocol token and just asking all the other guys who are raising. I think the only way you can go forward now without figuring out a way to use the native protocol token is actually to present your token economy and how it retains value for the shareholders and stakeholders. And just how much as you guys who are going out raising money, when does that now become the first part of the pitch rather than the ask me later about it? Because I think that's the only thing you can be now is this is how a token captures value. And anyone who's raising now, just have you thought about this and the token economy, where's it sitting and maybe moving that forward in the whole pitch?
Probably, I feel that might be a bit related to us, as we didn't really go into that too much. Yeah, that is correct. I've done a lot of these, not necessarily panels. I don't do panels. I'm actually just filling in for someone. But
Mate, you're doing a fantastic job. Congratulations.
Thank you, kind sir. Look, I've got a lot of experience with presenting this idea, and I have noticed it depends on the sort of crowd that we're presenting. It just happens to be that this crowd is a little bit more tech orientated, and those things would have made a little bit more sense. But I have noticed when we get into those technicalities of how it's going to retain value, we tend to lose a lot of the audience, especially when you're dealing with a certain type of investor. And that's why we've gone more towards the angle of come and find us after we present the idea and what we're trying to do. And then let's talk exactly about the intricate details of how we're going to connect to the different exchanges and what the sort of rebate models that, for instance, ThinkCoin has put in place to distribute the value back to the network participants. So that's our view, at least. I'm not sure about the rest of the panel.
Obviously, any token's obviously a word that can mean a lot of things, but it has to hold a store of value. It has to be worth something. I mean, you know, we hold fiat currency in plastic or paper notes. Like that, all it is a piece of plastic, piece of paper. But what it does mean is that I know that if I've got a $100 Australian note in my hand, that I can go to quite a few places and spend that and get all sorts of goods and services with that. Tokens are no different. The only thing is that people have to believe that what you're staking them against or what it's worth or what the store of value is something that I'm interested in getting involved in. And yeah, sure, to actually generate liquidity in your token requires it to be stimulated, and probably, you know, whether you're buying back tokens and burning them or whether you're restaking them or how you're actually doing it, but there's fiscal and monetary mechanisms on how you can do that, and I think that's part of the whole. You can't actually say this is our plan and this is what we're going to do, because it's going to move, it's going to change depending on what you're doing. Obviously in the loyalty space it makes sense because people are used to game mechanics or earning points for actually using. What we're doing is they're using a fiat currency to purchase something. They're actually going to get a bonus that can probably be exchanged for goods and services as well. So if I'm going to do my normal shopping behaviour and save things online and go into stores and buy them, and I can get points for doing that I'm not getting now, then that might be worthwhile doing, depending on what I can do with them or how I can exchange them later on.
I think that makes a lot of sense. I think requiring people to use your token for something natural is great. From what I've seen, a lot of tokens have been sold and sold to people with grand visions of how they're going to be used and how big this ecosystem is going to be. But once these tokens list on exchanges, they just sit in wallets, right? They don't actually have utility. So our approach is to actually create the utility first and create the demand for the tokens first and then list it onto the exchanges. And then there needs to be a plan for how the tokens are locked up, how they're distributed, how they're locked up again. So these things are very detailed, and we can discuss it. Yeah.
Question? I've got one here first. But I've just got a quick one. Jack, are you here for the weekend?
I could be.
Are you? So you haven't planned to
throwing
stay?
a party?
No. Well, no. I just wanted to check. We just sort of wondering, mate. You've flown all the way from Shanghai.
Yeah.
Are you going to see the beautiful city of Sydney?
Sure. I will stay for you.
Awesome. Great.
Thanks. Just on that view, I mean, do you think that potentially a lot of projects obviously use the ERC20 for probably the cheapest source of funding that we've ever seen, and they therefore didn't create any uplift token economics. Otherwise, you're putting yourself completely, which I think they're all securities anyway, but you put yourself under the wrath of the securities laws, especially if you start presenting to investors, non-sophisticated investors, and start talking about sinking mechanisms, uplift mechanisms. You know, you are a security. So, you know, I think that's probably why. What's your view around that? I mean, are we going to see massive switch now, we think, towards security tokens?
Yeah, I think there is a massive switch towards utility tokens, but I think there's a line to be drawn, right? Like, we can't say we're going to promise some sort of a return, and we can discuss the mechanisms of why we would buy and what the intent is, right? If the intent is to lift the price of our token, that's probably an issue. But if the intent is to do something with the repurchase tokens, that might be something else.
Awesome question out the back here. Was a comment on the panel?
No, I was just going to say, I think what's going to happen is there's going to be some major pivots in these coins. They're going to like have to go back to token holders and go, you know, now we're going to change the metrics. And I think you're going to get used to that, like heavily. Otherwise, you're going to get a lot of court cases, one. And number two, I think you're going to see this new technique, or I'm calling it token administration, where people come in and they literally liquidate a token, talk to the community, give back the money, like literally like an accounting firm's going to open
1 cent in the dollar, or?
Yeah, like literally just token administration, and then we put a big sign up.
Thinking that the other night, I was like, all these ones that are sitting out in the ether for me.
Freaking out.
I was just thinking, well, if they just, because then there's these new, I was like,
just call it in.
Yeah,
like, we thought it was a good idea, we got it wrong, we're sorry, and here's the money back as much as we've got, you know?
Yeah.
That's what I think is going to happen.
And quickly, please, before it, you know.
Before it vanishes into tokens.
Further, I've got a question up the back here. Catch.
So I think you confused exchange and liquidity with token economics. Why would you invest in a company if you didn't know the token economics, and why would there be pressure to go up? You know, to look at a company and say, "Oh, we'll figure it out at a later date," is the most stupid thing I've ever heard.
Is that a question for ThinkCoin?
Yeah, why not?
Sure. Let's catch up after. I'd like to have a chat. I can run through the token economics, because that's the whole idea. Is it's a networking event. I'd like to discuss the idea, what the problem we're trying to solve.
Smoking Panda. We are going to the Smoking Panda after the event for networking and token economics conversations.
There we go. Look forward to it.
And Big Kev, you in the room, is leading the charge.
You an investor, sir?
Yeah, that's right. And we're all going to be sober on our 12th anniversary, which is in October, and thanks to the Spark Festival. We'll talk about that later. But great. I've got a question over the back here, Oscar.
Cool. All right, just going back on, and I'm actually going to counter Tim, luckily that we're sitting next to each other, because we actually had this debate last Saturday about CryptoKitties, actually, and I'll specifically talk about CryptoKitties, because Tim was saying that CryptoKitties is not the killer app on the blockchain, and I was saying, no, it is, and that's the best use case we've ever seen, and that's probably the best DApp that we'll ever see, I mean, for the next year or so. I'd like to hear your thoughts, because because CryptoKitties, I mean, as you know, used up the... No, I'm dead serious, because, yeah. ERC 721. Just give us your thoughts. Is that the next?
I'm extremely bullish on this non-fungible tokens. It is trustless. It's immutable. Non-fungible tokens, yeah, NFTs. Because there are. If you think about it from a community perspective, you know, like the people who collect classic cars, right? They all get together and they go to a forum and they all go hang out there. They don't care whether that forum is run by PHP, ASP, they don't care. It's about the community. That's the strength of that. So they don't care whether it's on Ethereum, EOS, whatever the protocol. That is a true app, like that's a true community, and that's very strong. And they like to buy the application of classic cars. That's a sick business, right? You want to make lots of NFTs, classic car NFTs. you're going to make some serious money. And I believe one of the CryptoKitties recently resold ever so for a huge price recently as well. I think it's coming back. And I think, as I said, I think that application I just said, it's collectibles are an insane business, and yeah, it's just never been done digitally before. You can't say, I own this sword, right? You can't trade that. And there are a lot of blockchain games actually starting up where it's going to be mass multiplayer where you can trade the swords between different things as well. And I think that's another great example of that.
Tim, have you got a counter on that one?
I don't know. I mean, I think CryptoKitties in principle is a great idea. But bearing in mind it just collapsed the whole Ethereum network, it just brings to the fore the core fundamental problem of Ethereum about its scalability. I think the idea is great, but as a killer app for itself, I mean, it's too much within the whole sort of echo chamber of the crypto space, in my view. But I think the principle is absolutely right in terms of what it can do in the future, providing the technology is sorted out. That's my counter to that.
Right. Just on that one, Cameron, you 80% of tokens are on Ethereum. Why did you guys decide to build on Stellar?
Well, basically, the Stellar protocols, we're actually exchanging loyalty at the point of transactions happening. So we needed a network or a protocol that can actually do the transactions in pretty quick time. Between 3 and 5 seconds is pretty quick compared to a few minutes. The scalability of the network's quite good. The cost of transactions is near nothing. That's always a big plus. We're also an IBM World partner. We work with IBM closely on other projects, so it made sense that IBM's backed it quite heavily.
No Hyperledger there? No.
Well, Hyperledger's a Linux project. It's probably, I wouldn't really call that. It's more for private blockchains. But I don't know if you saw the announcement that Lightyear has acquired Chain out of the Valley. They've started a new venture called Interstellar. That happened yesterday, I think.
Right, yes.
There's a lot of projects on the Chain company that are private. They want to go public now. So there's the reason behind that.
Right.
Plus, they'll also control StellarX, which I mentioned before. So look out for that. There's a lot happening in that space. It just makes sense for us to go with Stellar over the... I mean, you've got Constantinople, which is going to be released, I think, in about 3 weeks, which is a fork on Ethereum. There's been, I'm not sure how many there was, out of the Ethereum improvement proposals, I think there's over a couple of thousand. So there's probably 3 or 4 that'll get across the line. We'll see what happens. It's supposed to introduce some stability into the network as well.
Good. We like IBM. Question over here, and then back to Ivan. Thank you. Sorry, what was your name? Lucy. Thank you.
Hi, Ryan. For the ones who are raising money right now, obviously the industry has changed a lot. And last week there was an event in Sydney, Crypto Summit. I didn't go, but I heard like 100 people went, so it's not very big. So, was wondering, is people's, as a project, how's your marketing strategy going? Are you still hitting every single event around the world? Because that's what a lot of projects were doing before, but what's your strategy now in a bear market?
Just from RainCheck's point of view, we formed the business in December, or November I should say, of 2014. We've been around a little while. Started, I think, with the first startup at Stone and Chalk. We have a platform that we've built out over 3 years. We're building things. We've got a BAU that's happening. We're running that side of the business quite heavily. We've decided to run a blockchain project, if you like, on the Stellar network to facilitate issues that a lot of our retail brands have around loyalty. So it's a project. It's not our sole purpose is just that project. It's a project that we're running that we want to fund to build it and to extend that on a global scale. So we're still running our normal business as it runs. So
can't you throw the profits of that into it instead of...
Well, we are. From the normal SaaS-based business, we'll probably buy back the tokens as well.
Beautiful.
I think really good projects these days, they can only raise $3 to $5 million. everything's changed dramatically. So for us, our first round closed really quickly, and all these big investors came in. But right now, it is very difficult to raise from token funds because they have lost a lot of money. One, they didn't do asset management on the amount that they raised in Ether from their LPs. So they just held that from 1,000 or 800 down to 200 or 170 now. And a lot of the ICO projects that they invested in heavily in the spring, they have yet to list because they're all afraid. Once they list on the exchanges without any big demand for their tokens, in terms of utility, those tokens will fall 80, 90% without the projects actually buying back the tokens themselves. That's the reality. So we understand that. And for us, the way we're approaching it is that, launch the products and services first, right? So projects that need market making, they can actually buy our tokens, and then we give them a credit to do market making, and they get our tokens, right? So it's essentially free market making for project teams. And then the funds that will launch, right? If you compare our Sharpe ratios, our volatility, our returns versus what you can get in the traditional space, I mean, there's no question, right? If you put up KRONOS versus a Citadel in the traditional space, that's the best hedge fund, right? That most people can't even get into. The returns in crypto is so much higher. So the only question exists is how do we get that fiat into this crypto system, right? So we need a broker-dealer to facilitate that in the US. And we need that in other countries as well. So if people can invest into our strategies easily using fiat and get fiat back, they don't need to understand what's going on in the back end, but that money will be providing liquidity in this whole ecosystem.
Awesome questions. Kevin, Ivan, did you still want to ask that question, or have you just asked Sam it? Has he answered it? No. Oh, Sam, Sam, you're off the piss. What are you talking about, Ivan?
Anyway, so this is a question for RainCheck. So your tokens, they're used at point of sale, are they?
No. Well, they could be used at the point of sale, but not probably at the beginning. They're just issued to people for doing normal things like saving, if they're rain-checking items from online sites, or if they're actually making purchases of the items that they found online. Just different shopping behaviours.
So with Stellar, is it the same as Ethereum, where you have to have Stellar tokens to actually move your coin here and there?
What do you mean, like Stellar lumens?
Yeah.
No.
Or like the gas fee to...
There's no gas fee. It's a Stellar consensus protocol it uses. It's not a proof of stake or a proof of work.
Yeah, I'm not very across.
Okay, so
there's
the nodes on
does not pay a fee to move their coin.
No.
Who pays the fee?
There's no fee. There's a bunch of nodes on the network. The nodes are all, there's anchors that operate the network, so you can come from fiat currency onto the Stellar network. The nodes then transfer across globally onto that network. Each node, there might be 7 nodes in what's called a quorum. The quorums, 2 of those nodes might be part of another quorum, so they call it quorum slicing, and that's how they reach consensus really fast.
There's a block reward, I guess.
Well,
I'll read up on Stellar.
Okay.
Ivan, I'm quite surprised you don't know much about Stellar. Oh, mate, so I'd be absolutely, no, it's not. Sorry, Big Kev.
Okay, so I've got a question I think that's quite an open question for everybody, and that is, so we've invested in, everybody has invested in a shit ton of ICOs, right? And day in, day out now, we look at the ones that have hit exchanges, and week in, week out, I'm now starting to receive notification from the various protocols or investments that we've made. Hey, you know what? We're looking at the bloodbath in crypto. We're actually choosing not to list on an exchange. And when you look at the pool of investors, at the beginning I kind of thought, but now I'm starting to think personally, you know what, that's absolutely the right business decision. Why would you list now? And you've sort of got a lot of people that want liquidity. Do you guys across the board think that that's right now the right decision for an ICO, regardless of who they are, to sort of say, hey, you know what, we don't need to list right now. We're going to keep building, working, just put the whole listing thing on ice, and we'll come back to that.
Yeah, I think it is the right choice. When we accept our investors' money, we have a fiduciary risk to look after those investors, and if that's in the best interest of the investor, then I think it is, and so I do agree with that model.
I think these projects are going to take a long time. There were some, we were just throwing money at white papers. That's not how projects get built, So, yeah, your money's going to be locked up more like a VC, I guess. You're going to wait 2 to 3 years, even longer. That expectation and that whole flipping was insane, right? It reminds you of, I used to build websites, and we used to just whack up some affiliate links and build some pages and get some traffic and just flip the site and just, I didn't really get into the flipping business. I don't know if anyone ever got into that, but there was this whole ecosystem of quickly build a website, get a bit of traffic, do some sketchy stuff, make it look really good, and then flip it and sell it, and then move on to the next one and just burn domains all day. And it reminded me of that, right? So I do think, it's probably the best thing you can do right now. I guess it goes against the whole prospect of this ICO market. Is the ICO market more in trouble? I think that's really the question, because that whole thing was like, we get liquidity fast. That was the idea. That was the pitch to some extent. But yeah, if I was holding a coin right now, I wouldn't want it on an exchange, because everyone's going to sell it, because they're like, I'll just move on to something else faster. Cryptocurrency just moves so quickly, right? Like, I think humans are naturally just not patient people. They're just impatient, right? And that pisses people off. They get angry. So do I feel good about that? No. But do I realize that it's going to go to zero if we don't do that? Yes. But emotion drives over logic, unfortunately. So I'm still going to feel pretty angry. But realistically, it's probably better for you as an investor, if you think about it logically, and most people don't do that, to hold. So I think people are going to be angry, but actually it's best for them, if that makes sense.
Awesome questions. We got any questions over here? Kev, Smoking Panda for you, mate. Smoking Panda. Hang on. Oh, sorry. No. A shot that. Sorry about that. That's right. Did you need? You'd like Jack to answer that?
Well, first off, I think too many ICOs, shitty ICOs, came onto the market and killed everything. So I think having a break is good. Having a pause is good, so people can reflect. Investors can reflect, and the project teams themselves can reflect. But I think it's bad to say in a blanket statement that we shouldn't list at all right now. I think if a project can really show the use case and create that demand for their token, they should list. And if any project succeeds in doing that, I think that's what's going to build the confidence, right? And to this gentleman's point about killer apps, I mean, what's a killer app? Like, how many people here own CryptoKitties?
Oscar.
2, 3, all right. So what's a killer app, right? I think we're really trying to make that utility and show people that first before we list on an exchange. That's all. If you can show that faster, you should, and you can, then you list. If you can't, then don't list. And I think ICOs should be faster than traditional methods anyway, because you're raising money so much faster, right? In traditional markets, like IPOs take forever. So I don't think that should be the case for ICOs. If a project team gets even $3 million within a month or two, that's much faster than what you can do in the traditional side. So your progress should be faster as well.
Yeah, just quickly, I just wanted to say that I think that the ICO market actually opened up investment for a lot of people. Someone mentioned Venezuela before. Previously, they probably wouldn't be able to invest in startups or tech. They think, God, that's a great idea. I know tech companies are really hot. They're doing a lot of things. You know, a few of the biggest companies in the world now are tech companies, right? How do I get involved in that? Probably couldn't do it then because the VCs, the angels, these guys sort of had it locked up. If you look at an IPO, I won't mention any names, but there's a lot of tech companies in Australia that are probably only a few years old that have listed. on an IPO. And if you look at their charts, all of their charts compared to an ICO, they're exactly the same. Merchant bank grabs hold of them, they do the listing, it goes up, they all bail out, and it just sits there going from, let's say, 53 cents all the way down to half a cent. Just sits there. That's what it does. I don't see the difference between what's happening in the ICO world and what's actually happening in the IPO world. It's just one's regulated and one's not at this stage. So yeah, there's advantages and disadvantages from both sides, I guess.
Awesome. Let's roll on to the next question. We've got one at the back here.
All right. I have a question for the entire panel. Do you think airdrops are a good idea? And if yes, why?
I personally don't think they're a good idea. There's another term called smart drops that you can read about. I don't really agree with them. No, I don't. I think you're not really getting any faithful people in your community to back your project that way, my opinion.
Yeah, I think airdrops. We looked at that at the start of our project, more for the new user acquisition. The more coins we got out there, the more people might connect to the network. But we ultimately decided against it, mainly because we didn't want to saturate the market with our coin.
Yeah, Diamonian did that a few weeks ago. They decided not to airdrop anyone. I mean, I got a few calls from their solicitors saying you said after you promoted them that you'd airdrop, and it's just not sure that we had anyone who actually wanted to catch those drops. But Sam was going to go out and lynch them the next day, and then the lawyers rang me about those. But anyway, we've got another question at the back here. Ladies and gentlemen, are you ready?
So the token chat's been pretty good tonight, but more importantly, what's your opinion on Bitcoin to Bitcoin Cash?
the microphone
Spicy
passes
one, that's
several
one.
hands.
I'm not a massive Bitcoin Cash fan. I'm not against it. I'm sitting right on the fence. I don't really know enough, to be honest, about getting super deep, and I'm not super spiritual about anything of those. I think that they're gonna fork again is pretty messed up. Like, that's truly decentralized. Like, they all hate each other. Those blocks are empty, right? Like, I'm not sure exactly what's going on. I don't know exactly what. I think, I hear Roger Ver all the time. It's cash, but Nano's cheaper and faster. I feel bad to say that, but it's true, right? Nano's real quick, and it's free, and it's instant. Like, yeah, I don't know what else to say about that. It seems like a really, really convoluted way to make another blockchain. That's spicy, but yeah.
Okay, cool. Have we got? Man, you're a fucking heavy-hitter question out the back there. How are we going? Everyone have a look at themselves, take a deep breath, close your eyes and just listen. No. I'm just being silly. Okay, more questions. Do I have to pop out some of my questions? No, come on. I thought we had one up the back there. Sorry about that.
Future of stablecoins. Can you hear the panel's opinions backed by real-world assets, US dollars? I heard something today about Winklevoss twins putting out one on the Ethereum blockchain. Can you hear your opinions on that?
Nice and topical. Excellent.
I think it's great. We need that. We need some solid stable coins. It makes money move around faster. It makes it move 24/7. We don't have to wait for banks to transfer fiat in and out, particularly in our space with OTC, where we want to trade on the weekends faster. We're waiting for the banks to process the money. It's really annoying. So I'm very, very bullish about stable coins. I want to see an awesome stable coin so we can trade more and trade faster, right? A lot of what the answer is, I guess some people feel a bit weird about US dollars because that's the whole reason why we got into this. It's a bit spicy, again. That was a real spicy night tonight.
Mate, and the Smoking Panda has a special spicy
Cocktail.
doesn't it? Kev? Come on down.
Come on down to the Spicy
Come on,
Panda. Get
The
spicy.
Smoking Panda, 5 to 7 Park Street.
You know, I do think that if we could ultimately get in and out of a stable coin with almost zero fees, and then we could really crank up real world payments really quickly, right? Because it's the buying and the selling on each side that's stopping the cross-border the payments right now. Like if you could buy a crypto on one side and transfer it to another and sell it on the other side, but it didn't move at all, and it was almost zero, or if not zero fees, that essentially would be wicked because you're actually better than a money transfer service. And then that's the real world case that you were talking about.
That's stellar, yeah.
Yeah.
I think the Winklevoss, I think you're talking about Gemini dollar, is that what it is? Yeah,
Yes.
I don't know a lot about it. I haven't had time to read about it. But yeah, I think stablecoins are yeah, there'll be a lot of noise about stablecoins coming up as well, definitely. I just think that needs to be on a proper network, proper protocol.
Jack, you got a comment on that?
We already use stablecoins, so we use TUSD, USDT, there's Maker, there's TerraCoin coming out. There's a bunch of coins already that you can use, right? So, and it's almost free.
That's it. Any other questions? Got one up the back here.
Hi, with the transaction fees though, aren't the transaction fees actually built into most of the cryptocurrencies? So I was working in the banking sector and people were saying, you know, but we're going to buy out the exchanges and we're just going to raise transaction fees, and the money transfers, the fees are going to be built into the transfers, and also the taxes. So you actually will be able to pay your like GST when you do your payment, and all of that is already built into the blockchain. They just need to lift the costs of it over time.
I just said, which bank was that? Yeah, I mean, I can only talk about how Stellar might move the transaction, where they will move it from a fiat currency onto what's called an anchor. The anchor will go onto the Stellar protocol and move it around almost zero time. There's almost zero fees on actually moving it on the Stellar network. There'll probably be fees charged on either end. Someone's got to make money somewhere, but a lot less than what you're paying now. But you know, the distributed ledger obviously opens up a lot of opportunities for banks. I think banks will just have to work out how they're going to do that. They'll definitely have to come around to do something, but what that is, who knows? And what protocol they use, who knows? Whether it's, you know, something that's, you probably argue that's decentralised like Ripple, who knows? Or, no, we'll see what happens.
Or Stella, Ivan. One of those ones. Any other comments on that?
I think there are fees even with Tether, right? It's actually pretty pricey, relatively, right? I don't know if you've sent Tether. I find it really annoying. And also, it's not $1. I don't understand how that works. It's like 99 cents, then it's $1.01. I don't get it. I'm confused. Like you're buying, I don't know, access to something. I don't get it. And there definitely are fees with all cryptocurrencies. I'm not sure, and I just think they're really high. It's just not. You got to get it down much lower to get that loose friction, I guess.
Did you bring your credit card? Yeah. Okay, great. Have we got any more questions? It's nearly time to sort of wrap it up. We've had some exclusive guests turn up tonight. Sounds like they're putting the credit card behind the bar at the Smoking Panda, one of Australia's largest exchanges, if not the biggest exchange, thanks to Lysanka Pereira from Independent Reserve. But have we got any more questions before? Have we got? Last time he arrived a little late, we got him up on the panel. Not sure he was happy with that. But no. From all honesty, do we have any more questions for this esteemed panel? Jack from KRONOS, Cameron from RainCheck, Fred from HiveEx, and Finder. Jacob from ThinkCoin. I think we've got the final question over here, ladies and gentlemen. This will wrap the night up.
Just a question, general question for all of you. I don't know if any of you know that much about it, but security and honesty and truthfulness on the part of the people making the decisions in the space.
Hang on. Is there a lawyer in the house? We have a lawyer. There might be some defamation claims here, but quick one sentence chat each.
You're referring to the individual companies?
Security in general and truthfulness amongst the
I'd just like to say, I think if anyone's joined an exchange, whether it's Independent Reserve or any of the other exchanges, you need to jump through quite a few hoops, okay? It's, whereas you go down and open a bank account with a driver's license, pretty simple. So.
And I'm a pretty honest guy as well. I've just nominated Lasanga to throw the card on the bar. I know I said I'd do it, but hey, you know, he's Australia's biggest exchange is in the house. So look, I just want to put a massive round of applause together from Jack, who's come all the way from Shanghai tonight. I'd love to show him Sydney, but I'm actually flying out the other way tomorrow morning, but I'm going to line you up tonight. So come over with some drinks. I'll line you up for a couple of days entertainment. Big round of applause to Cameron Wall. Known this guy for several years. Fred Schebesta, who's a regular for all of us. And big thanks to Jacob from ThinkCoin.